Vancouver real estate is entering one of the most uncertain phases I've seen in years. Inventory is at record highs, unemployment is rising across Canada, and sellers are finally caving on price. But what does this mean for you as a buyer, seller, or investor? In today's video, we're breaking down how rising unemployment is reshaping Vancouver's housing market and where things are headed to next. With our August analysis of Vancouver's real estate market, in this update, we'll connect the dots between the labor market, sales activity, inventory, and prices, and I'll share what the data tells us about the short-term and long-term outlook. So let's start with the bigger picture here. Canada lost 41,000 jobs in July of 2025, and this is the largest monthly decline in over 3 years. You can see that we have the chart here over to the right, and this is showing us the number of workers unemployed for 27 weeks or more. In Canada as a whole, we have this 6.9% national unemployment rate, and that is only unchanged because 33,000 people left the labor force. But as a whole, Canadians unemployed for more than 27 weeks is the highest share since 2011, and you can see that there's more than 370,000 Canadians that are facing these massive layoffs or job cuts, whatever it may be. Hard to find work in many areas of the country, and this is a worsening landscape for us. The economic data is out. We are officially in a recession, and it's going to be really interesting to see how this moves forward. A lot of big banks have now, and commentators have changed their stats when it comes to interest rates. They are now saying that it's more likely of a 100% rate cut in terms of the September meeting, but still that's not going to have a huge impact here in the real estate market. If we are in a recession, if there's this massive amount of job loss, people are still not going to want to be transacting in this current market. I'm going to pull up the chart here in Vancouver when it comes to unemployment here, and in Vancouver we're not immune. Our unemployment levels are rising, and that's critical because real estate here is more sensitive to income shifts than almost anywhere else in Canada. Every single job loss is a buyer loss or a homeowner that is under pressure. And when we look at the charts here, you can see that the Vancouver unemployment rate now is sitting at 6.1%. And it has started to drop a little bit here since January of 2025. We can see the highlight here when we were in that COVID inventory, but we're still at numbers in terms of unemployment that we really haven't seen since 2016 and beyond. So this is definitely some new territory. It's going to be interesting if we're going to have a slight uptick moving forward along with these recessionary measures that are being documented here. So it's going to be very interesting to watch this Vancouver employment number. If this is going to be, in fact, a breakdown, which is nice to see a couple months where it stopped in and around that January of 2025, that number here right at the pinnacle, or if this is just going to be a fake out and we're going to rise back up like we're seeing across the country. When we're looking at the July performance in Vancouver and looking at the housing numbers, sales were up here 9%, monthly sales increase, the strongest monthly gain since October of 2024, but still down 4.1% year over year. You can see on the screen here, 38% sales to new listings, up from 35%, but still at levels that historically precedate negative price pressure. Meanwhile, active listings have jumped nearly 20% year over year, including a surge in court-ordered sales. The sales to new listings, as we just talked about, is just 38%, still in the range that typically leads to downward pressure on pricing. And the big one that we really look at here is the 19.8% inventory increase. If we continue to have these inventory increases, pricing is going to continue to slide downward. I have some listings coming up in buildings, and when we are trying to come up with a comparative market analysis, it's very hard because A, there's not a lot of sold data, and B, especially if you're in the downtown core, I looked at one property, there's 11 active one-bedroom units, and we want to bring a one-bedroom property to market. These are all things that is a great benefit to buyers, but horrible selling conditions currently in certain areas, and specifically certain buildings if you have a lot of inventory. As we get a little bit deeper into the inventory numbers here, single family homes are sitting at 8.8 months of supply, the highest in decades. Condo inventory is at 6.2 months, which is tighter, but still elevated. And to put this really into perspective, the last time we saw this kind of supply, Vancouver didn't collapse, but it did mean long, flat price cycles where buyers had the upper hand. And I think that's exactly where we're going to be over the next couple years for sure. We're going to be in a very, very soft market. Lots of selection for buyers, but again, there's always opportunity in every single market. If you're looking to upsize or get in for the first time, this is perfect conditions for you. And as you can see, I know it's a little bit small here on the left-hand side, but in terms of the single family inventory with the chart on the left, we've had finally a month where it dropped a little bit after, what is this? 1, 2, 3, 4, 5, 6 consecutive months with the single family inventory. And then with the condo inventory, it's flatlined here for about the last 4 months, but these are the highest levels we've seen in the last 10 years. But keep in mind, August, we are in the dog days of summer. I do anticipate in September, we're going to have a ton of inventory coming to market. I have 4 properties myself getting to market after the Labor Day long weekend. So I expect these inventory numbers to continue to get boosted upwards. When it comes to economic factors, you can see on the chart here that are influencing the market right now. There's several factors that are adding fuel to this shift. Interest rates are expected to come down to some commentators by 50 basis points by early 2025. We'll have to see if that happens. But so far, the BOC is holding steady, but that is due to change in September, as we mentioned off the top. At the same time, job vacancies are at their lowest level since 2017, and private sector job losses are mounting. Add to that a rental market that's likely to soften as population growth slows and new supply comes online, especially purpose-built rentals, and we have pressure across the entire housing spectrum. And you can see that, when we look at these charts here with interest rate outlook, job market weakens, and the rental market shift, it doesn't really matter where you are at in terms of your buying or selling journey. Someone somewhere is being affected. And that is what the issue here is with this market, and why so many people continue to be bearish and don't see really any change in this market for the next coming years. We have more and more inventory coming to market. We have job losses. We have immigration that is dropping. And yes, principal residences are still near all-time highs, but the non-residences have essentially disappeared. Those are the people that are influencing rentals. And without those rentals, the rental market begins to soften with oversupply. That means landlords aren't making enough to be able to float their assets, which continues to push more units onto the market as well. So as we get into the Vancouver market segment forecast, these are 3 topics I want to talk about here. And first, we're going to start with single family homes. So I don't think recovery is going to be expected until early 2028. As sales slowly improve and new listings finally taper off, it's going to take some time. In the condo market, prices are likely to soften further through 2027, 2028 due to near record completions, though the long-term picture into the 2030s is much stronger just due to the fact that we are going to have a supply shortage. I've outlined this before. I'm going to make another video on it, but everything that's going to be essentially available are going to be these purpose-built rentals. Permits are falling, the new construction is falling, and the only thing that's being built are these purpose-built rentals. So we will see some shortage in housing, but it's going to be near that 2030 mark. When it comes to the rental market, it's going to continue to soften. Construction completions are up 5% year over year, slower population growth. Rents are going to continue to soften, which is going to create opportunities for investors who can buy at a discount. And definitely, if you are a renter and you're watching this, this means that you're going to be able to lock into some very nice terms. I had a colleague of mine who's in the video space who was renting out in Langley a 1-bedroom. He was able to get into a 2-bedroom unit, bigger space, newer unit at a discounted rent than his 1-bedroom. So there is a lot of opportunity out there for the rental space as well if you are in that space. In closing, this is a market in transition. For buyers, opportunities are emerging, and for sellers, expectations need to be adjusted. And for those that are investors, patience is definitely going to be rewarded. And on the screen here, you can see that I've outlined some of my short-term outlooks here, as well as the long-term forecast. So the market is going to be what it's going to be. It's going to be soft, gradual declines in pricing, I think, for quite some time. And it's going to be really interesting to watch these rising unemployment rates. But until the next one, put your comments below, subscribe, and make sure to book that discovery call with me in the description below or on your QR code on the screen for a super low pressure informative meeting. But until the next one, thanks so much for your support.